Today, I want to talk about how a massive short squeeze is crushing shorts right now. Now, this squeeze isn't the result of a reverse split, but it is one of the largest squeezes we've seen in recent times. It's larger than the June 2021 run-up for AMC, and it's happening right now, and it's destroying these shorts. So stay tuned, and let's make some money. And now I'm going to dive straight in with the key information. So, we can see from this morning that this stock was only trading at $6.76 per share. At the close of market today, the stock had run up to around $17, $18 per share, and in the after hours today so far, it's already hit over $100 per share, nearly to $120. That is an absolutely giant move, jumping around 20 times in one singular day. God only knows what it's going to open at tomorrow morning. The funny thing is, if you do zoom in a little bit closer, this chart does actually look like the AMC chart from back in the day. Here you have the January 2021 run-up, followed by the June 2021 run-up as well. Obviously, since June, AMC has been trading basically sideways and a little bit downwards as well, and AMC is soon going to have this massive explosion following the top stock. Now, obviously, like usual, I'm not suggesting that you jump on this stock straight away. It could still move up further, but it could easily have already exhausted its squeezing possibilities and may soon be on its way back down, even as early as tomorrow morning. While it could potentially run from $100 up to $200 or $300, it could very easily turn around and come straight back down to $6 if the squeeze on this stock has finished. We know that a short squeeze is a fairly quick time horizon event, especially as we hadn't heard much information of this stock until now, and it didn't have a giant short interest. Especially as not much has been heard about this stock, it's likely this stock didn't have many synthetic shorts, and therefore it's possible this squeeze is already over, although it may continue. What we do know is that some shorts have indeed been squeezed in the process. As Michael tweeted, he said there's no SEC news on top that he's aware of at the moment, aka the company haven't come out with any new business lines or any specific catalyst to cause a massive price rise. But he said he thinks a lot of market participants went short with the selling action earlier this week and are now getting squeezed in some areas. If we look at the stock earlier this week, the price was rising fairly quickly, setting new recent highs, and therefore it's likely a bunch of shorts piled in to try and push the stock back down, but obviously that did not happen for them. And now these shorts that tried to force the price back down are absolutely getting squeezed. This obviously adds more pressure to those shorts as it's going to decrease their overall portfolio and bring them closer to a margin call on their entire portfolio position. And obviously if they do hit that margin call, they'll be forced to sell off their entire portfolio and close out of all of their shorts to repay those margin loans. And obviously being forced to close out of those shorts could end up with some of these hedge funds being forced to close out and cover AMC short positions. Now, Ham Short Killer tweeted saying top closed at $20 per share, up $13 on the day. But as soon as those market trading hours finished, it rocketed to $32 per share and now significantly higher, up to around the $120 region. And he said some lucky naked short is having a terrible day. Or maybe it's a really great day depending on what that short is into. Now, I would be fairly careful about trying to jump into Top Financial to ride this short squeezing wave because it is a fairly sketchy company. It says Top Financial Group Limited is a holding company which engages in the provision of futures brokerage and other financial services through a trading platform. The company was founded in 2019 and is headquartered in Hong Kong. So this sounds like another one of those Chinese scam IPOs like HKD and a number of other companies as well that blew up sometime around last year. While HKD did obviously go significantly higher, up to $2,000 per share, it's not guaranteed that Top Financial will do the exact same thing, and therefore it's obviously very risky. Especially as Game of Trades tweeted, the probability of a bear market happening is currently at a level never seen before since the 1950s. Guys, be sure to sign up to Moomoo, the sponsor of today's video, using the link in the description below. You can currently receive up to a whopping 15 free shares, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use, it's very clear and simple, they've got tons of technical indicators and advanced charting tools. And with Moomoo, you can also get free 24/7 customer support, and you can also trade around the clock with the full extended trading hours. This bear market probability model says the chances of a bear market are at the highest level ever. Currently, market participants are seeing extreme optimism in the S&P 500 and have basically gone all in on their long positions, expecting the next bull run, but it shows there is a giant chance of a bear market and recession. Now, you may have also seen that defendants AMC have filed some new proposed settlement documents for the AMC lawsuit. This proposed agreement proposes a new settlement to those plaintiffs on the condition that they agree with AMC's denial of all wrongdoing and liabilities. It says defendants AMC deny any and all allegation of wrongdoing, fault, liability or damages with respect to plaintiffs' released claims, including but not limited to any allegations that defendants have committed any violations of law or breach of any duty owed to holders of AMC common stock. Defendants maintain their conduct was at all times proper and in the best interests of the company and its stockholders and in compliance with applicable law. And as a result, a settlement payment of 1 share of common stock for every 7.5 shares of common stock held by all holders of AMC will be issued after the reverse split, or at the same time as the reverse split. Now, Allegheny have again agreed to this lawsuit, so effectively we're just waiting for the courts once more to pass through this lawsuit and make sure everything is okay. But it seems that once again Allegheny agreed to this settlement payment of 1 share of common stock for every 7.5 shares held. And Allegheny are perfectly happy to agree that AMC has not done anything wrong and has not breached any kind of laws or duty of care to anyone at all. Now finally, I also wanted to talk about another film about the January 2021 run-up that will be released later this year. It says Hollywood's upcoming film Dumb Money depicts the 2021 events surrounding the mania behind the GameStop stock. Seth Rogen will star as hedge fund manager Gabe Plotkin, who lost billions of dollars on his GameStop short. Nick Offerman will portray Citadel founder Ken Griffin, while Paul Dano will star as Keith Gill, aka Roaring Kitty. It says the GameStop short squeeze of 2021 is headed to the big screen later this year and will portray the wild saga behind the video game retailer's soaring stock price in the early days of the pandemic. Now we can see from IMDb this is expected to be released around October of 2023, which should be a brilliant film. Again, especially getting Seth Rogen to star in this film and to actually play Gabe Plotkin of all people, it should be brilliant. As I said, looking at the cast, this should be a brilliant film and it's absolutely one that I'm going to go and see in Odeon Cinemas, which is effectively UK's equivalent of AMC that's actually owned by AMC as well. So guys, be sure to let me know down in the comments below whether you'll be going to see Dumb Money in October of 2023. Also guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!